Hi, this is Kristi Sullivan of Sullivan Financial Planning. Thanks for tuning into my blog. Today, I'm on a kick about college. I talked earlier about the college admissions cheating scandal, and now I'd like to turn my attention to a positive way to plan for college, not bribery, but actually saving. Today, I'm going to do just a quick talk about 529 plans and explain a little bit about the pros and cons. 529 plans are college savings vehicles that are sponsored by each state. So every state has their own 529 plan. That does not dictate where your child goes to school. You can save in your state's 529 plan and they can go to school anywhere in the country using that money. What it dictates is the state sponsorship part, at least, dictates the tax treatment. If you live in a state where you have state income taxes and you contribute to that state's 529 plan, you will likely get a tax deduction on your state income taxes for any contributions that are made to the 529 plan. This is not true for federal income taxes. You don't get any kind of a deduction for federal income taxes for putting money in a 529. But the kicker is the money in the account goes tax-free as long as you use the money for education. And recently, federal law was changed to allow that money to be used for education, K through 12, as well as college. Now, not everybody will take advantage of that, obviously, and not every state has implemented the K through 12 tax-free growth thing in their own state and their own rules. So check your own state for how that works. 529s were started in order to help people save tax-free growth, I should say, for college education, and that's what it's still primarily there for. You can put a lot of money in a 529 plan. You can put as much as your annual gift limits, annual gifting limits, into a 529 plan for a child, and in fact, you can do it up to 5 years in advance. So you can put pretty large lump sums into 529 plans before having to file a federal gift tax return. Another nice thing about 529s is that as long as you use the money for any kind of college expenses, and that could be tuition, books, room and board, laptop computers, fees, equipment, even study abroad, all those things can be paid for by 529 college savings money that you have saved. And again, the growth has been tax-free, so you have not paid income taxes along the way on the dividends and capital gains that were earned in the account on the investments. 529 accounts also have a very, very unique feature in that you don't have to take all the money out at a certain age of the child. So if your child, let's say you managed to save $50,000 in a 529 account, and your child uses $40,000 of it because he or she got scholarships or whatever, you would then be able to leave the extra $10,000 in the account indefinitely. So that money can continue to grow tax-free until that child's child goes to college, and you can change the beneficiary to your grandchild eventually. So that's pretty amazing. There are really not any other accounts that are tax advantaged out there that allow for that kind of passing along the generations. So that's my quick talk on 529s. If you do take the money out for anything other than college, you'll owe income taxes on the growth and a 10% IRS penalty, which isn't the worst thing in the world, but it's a really powerful tool to pay for college. I hope that was a helpful primer. To get more information about working with me, please visit me at sullivanfinancialplanning.com.